Tesla, my Tesla. Yes, dedicated Tesla video here today. We got to talk about why this stock is crashing, why it's falling off a cliff, how far it's going to go down, what's going on here. A lot of people are looking at this one. They're like, okay, is this about to get a lot worse for Tesla? Like, what's going on here? And as somebody that's been a shareholder of this company for many, many years now, I want to share my perspective on exactly what I think is going on here so everybody can kind of understand what the situation is and what's going to likely transpire. I hope you guys enjoy this. As always, don't forget to subscribe to the channel if you're not already subscribed. So Tesla, if I pull up my watch list here on Hungry Bull, it's one of the worst stocks I have on my watch list. By the way, it got a lot worse than this. Right now, this stock is down about 6.5% now. So at this time of screenshot, I was down 4.7%, but now it's down about 6.5%. So nonetheless, it's getting, it's getting pretty rough out there for Tesla. This was a stock that topped out at $1,243 not that long ago. And now here today, it's in the 700s. The last time the stock was in the 700s I could find was back in September of 2021. So in September of 2021, back when this was in the 700s. It went on a big, massive bull run and did phenomenal, right? And next thing you know, it was over $1,200. And then we had a big pullback. We had a nice rise. And then obviously now it's just kind of down, down, down. And meanwhile, obviously the company's making tremendous progress. They're, if you drive out there in the world, you see more and more Teslas with every given day. I noticed the supercharger's busier and busier and busier. We know that the fundamentals of the business are about as good as you can possibly get, and by far and away the best Tesla's ever had. But just because that's going on does not mean your stock price can't falter, okay? There's a company now that has a forward P of under 75 on it. Under 75. Now, mind you, 75 sounds really, really high when you talk about the stock market trades at a forward P of usually like 20-ish, somewhere around there. Maybe 15 on the lower end, sometimes maybe 25 on the higher end. So 75 is obviously way more in the market, but let's keep in mind, Tesla is a growth beast that is going to continue to grow for the next decade at insane levels. And they're going to scale their business into a company that's doing multi-hundreds of billions of dollars of revenue every single year. And that's going to scale just over the next few years, essentially. Okay. So that is some kind of food for thought. So forward P under 75 is actually extremely low for Tesla based upon historical norms. A year ago, EPS was 678. By the way, they're supposed to do 1048 this year. So yeah, I mean, it's a growth beast on the revenue side and the EPS side. But right now, it doesn't really matter. Okay. Now, the closest comp I've always felt to Tesla is Amazon. Why is that? Well, the reason that I've always felt Tesla and Amazon are the closest comps is, and I understand they got different business models and different revenue trajectories and different EPS trajectories and those sorts of things and different gross margins, absolutely. But they're the closest thing to similar businesses I've been able to kind of identify in terms of their scalability, right? Their mass appeal to the mass consumers. And how they just continue to keep innovating and just continue to come out with new game-changing, things for their business models over time. And so, if you track Amazon over time, right? I mean, this was a stock that went through a big run from basically about 2010 through 2018. It went from about $100 a share to over $2,000 a share, okay? It went on this tremendous run. Now, it's very important to understand that over the past 10, 15 years for Amazon, it's had a lot of big pullbacks in that time frame, essentially. It's not just all up day after day or week after week or even month after month or even, to be quite honest, a year after year. If you pull up a stock chart of the stock since 2010, right, the 2010 through about 2017-18 time, right, this stock had some major pullbacks. 2010 it had major pullbacks. In around 2011, 2012 it had some major pullbacks. In 2013 it had some major pullbacks. In 14 and 15 it had definitely some major pullbacks right there from 400 down here to 300, and that's over about a year span or so right there. You have this pullback here from about $660, $670 to $500 there. You had this big pullback here, and obviously by the time 2018 rolls around, the stock was $2,000 a share. So if you look at something like Amazon, you got to understand you get these time periods of crazy volatility. And I think Tesla is even a more volatile stock, to be honest, than something like an Amazon. So if you've seen these sorts of pullbacks from Amazon over time, understand with something like Tesla, you're going to get a lot of these over time. You're going to get some time periods where Tesla stock falls 30, 40, 50, 60%. And that's in a matter of 6 to 12 months. And so this is just something you have to kind of deal with, it being in a growth stock, and especially one that has, these type of growth numbers. Because like I said, Tesla, I feel like is a more volatile stock than something like an Amazon for many different reasons. Tesla's much more controversial. A lot more traders like to play Tesla because it is a volatile play. And also when it comes to Tesla numbers, those ones can move around a lot from quarter to quarter because it's a high priced product at the end of the day, right? You're talking about taking out a loan for it. Amazon's much more consistent because they're just, Amazon sells everything, but I mean the average thing that sells on Amazon is probably like $20, right? Versus, Tesla's average selling price is $40,000, $50,000 a year. So it's just different, right? So very important to keep that in mind. In Tesla, this is nothing new to Tesla in terms of major pullbacks. If you pull up a stock chart over time, Tesla's gone up so much that it doesn't even look like, you can hardly even tell the numbers essentially, right? But if you go back to 2013 through 2019, which you got to understand, I know they don't look large on when it's scaled up like this, but remember, this is important. These red and green lines down here, that shows you like volatility that was going on and like trading action essentially, okay? And I can tell you over that 6-year span roughly, this stock had so many time periods where it went down 20, 30, 40, 50% during that time frame where, you pull out a long chart and it looks like, oh, it just did nothing for all those years. Really, it went like this and this and this and this and this during all those years. And so do keep that in mind. This stock has a history of being volatile, and ever since it climbed out of that period, right, and went on its big run, it's had several time periods where this stock has been, in a massive downtrend. And so this is nothing new to Tesla. It should come as no surprise to anybody that's a Tesla shareholder that you're going to go through some pretty vicious downtrends. Now, the thought process I understand from a lot of folks looking at this is they say, okay, so Tesla is a super volatile stock, right? That has these massive moves up, massive moves down. Well, why not trade it? Well, the problem if you start trying to trade it in and out of the stock is, it's like, when do you get out of the stock? When do you get back in the stock? Because, even when it went on its massive run from about 2019 through basically, the kind of toward the end of 2021, right? There was a lot of time periods when that stock was going up that you could have said, well, I think we reached the top, so I'm going to get out of it. You could have said that at, 100, 200, 300, 400, 500, 600. You could have said it many times along the way. And then the question is, when did you jump back in? If you did jump back in, that's a tough part, right? Is to say, I'm going to get out, and then, you watch it go up more, and then it's like, oh, and then it goes down, and it's like, what price do you get back in at, right? Let's say it's been going down recently, when it fell from 1,200 to 1,100, did you get in then? Did you get in at 1,000? Did you get in at 900? And so that's why usually if you really love a company for the next, 5, 10 years, you just buy that stock, you put it in the filing cabinet. If it drops a bunch, you buy the dip, you add more shares and put those babies in the filing cabinet, and you call it a day. Because that whole game is just, it looks so easy when you look at a past stock chart. It's like, oh, I could have just got out here and got back in here and got out here and got back in here. In reality, it's a whole lot harder than that. Let's just put it that way, okay? It's kind of like you ever watch the Olympics, when they're swimming. And it looks like they're not even going that fast. Man, I could beat them. I think I could swim faster than Michael Phelps, right? Yeah, and then you get in the pool and you're like, holy smokes, man, this is no joke. So Tesla, by the way, now it's down 5.4% as this video is going on. But like I said, as of right now, literally, it's down about 6.5%. So keep in mind, it's an $800 billion market cap now. This is really controlled by the big guys now. Volume's not crazy on the stock here today. 22 million shares, 25 million is the average. If I had to guess, I think there will probably be a total volume today of maybe 30 million shares roughly. Somewhere around there. That's what I'm expecting, somewhere around 30 million shares. Max of 35, I would say, but probably around 30. So it's not like this is like some huge sell-off where it's just massive volumes going through and it's not like that at all really for this company right now. And so that's just kind of some food for thought there. Now keep in mind, right, there's a disease going around the stock market right now, okay? No, it's not the Rona. This disease is called we don't want to own any growth stocks at any price disease, okay? And this disease has already gotten the best of several compadres of Tesla, Maestra. Okay, one of those being Netflix. November 17, 2021, the stock was almost $700 a share. Okay, here today it's $371 a share. Well, $370, and by the way, it's probably down even more since then. Netflix got absolutely hammered. If you look at something like PayPal, another nice big growth company, September, the stock is almost $300 a share. It's $100 here today. $100 for PayPal, a great corporation, a cash flow machine company that has tremendous revenue growth opportunity for the next 5+ years. And no one wants a piece of PayPal right now. You look at something like Meta. I mean, they're a great traditional business model that produces crazy cash flows and crazy net income and has a beast balance sheet and has a great management team and has a chance of winning the metaverse. Literally, of any public company, they have the best opportunity by a mile. But in this sort of market, does it matter? Nah, none of that matters in this sort of market. And you look at something like Meta, stock's at 382. It's at a $500 billion market cap now, when this is really a stock that should easily be $1 trillion plus, right? It's at a P ratio now. P ratio of 14. 14.5 for a P ratio of Meta. This market is messed up, okay? We are in a messed up stock market. I can tell you that. When you got Meta trading at a P of 14, wow, okay? That's all I can say about that. Wow, okay? We are in a messed up market right now. Very, very messed up, all right? Now, this was as of yesterday. So basically, the moral of the story is, it's everything falling now. It's getting nastier and nastier. As of yesterday, we were obviously in correction for Russell. And by the way, Russell hit bear market just about 4 weeks ago, roughly. Russell hit bear market 3 or 4 weeks ago. QQQ is in correction. S&P 500 index is in correction. And Dow wasn't in correction, but based upon the losses that it looks like we're going to take today, it looks like Dow will also be in correction. S&P 500 will be in further correction. NASDAQ will be getting very, very close to bear market now. And IWM should be back in bear market, essentially, okay? So remember, we're in a very rough market right now. I mean, a very rough market. There aren't a lot of markets when you see all the indexes in correction territory or in a bear market. It happens every once in a while, but it's not something you should expect to happen every year or something like that. It happens pretty few and far between. And remember how fast this is all played out. It's not like this has been transpiring for 6 months, 12 months, something like that. This has pretty much happened in the last 1 to 3 months on these indexes. From where they hit their highs, the Russell was the first to fall. NASDAQ led the way after that. Then the S&P 500, and the last hanging in there is the Dow, right? Which is likely going to end up in correction by the end of today. Now, this is not, the market's been rough. For any of us that own small cap stocks, the market's been rough. We know this, right? I mean, these stocks have been absolutely decimated, right? And all these stocks are down even more than this now because the market fell yesterday, the market's fallen today. All these stocks pretty much are down even more as a percent now. And so this is something to keep in mind here is, retail has left this market for the most part, other than the few really core people like myself and maybe some of you guys watching this video that really are, like to do this over the next 5, 10, 15, 20 years. Outside of that core group, retail's gone out of this market, okay? So we can't count on retail magically coming back and saving the day. And so we got to understand that these stocks have been absolutely hammered, right? And it kind of felt for a while that it was just a matter of time before the big guys started getting it too. Because usually what happens is if you're going to go through a market cycle that's going to get rough, right? A correction or dare I say, bear market, right? Well, the first thing that's going to lead you there is going to be the more speculative stocks and the more, smaller cap stocks, right? Anything that's seen as more growth, risky, maybe not profitable, those are going to be the first ones to fall, right? And that's exactly what happened. Those stocks were the first ones to fall. Those ones will also be the first ones to climb us out and to get us back to, a healthy stock market again. Those ones will be the first ones to climb out, but they were the first ones to take us down. It was just a matter of time before all these other guys got it, right? It was just a matter of time before Netflix got it, and PayPal got it, and Meta got it, and Tesla got it, and Nvidia got it. And you look at all these stocks, now they're significantly off 52-week highs. Look at AMD, look at Nvidia, look at Tesla, look at Netflix, look at any of the stocks out there outside of maybe Apple and Microsoft. Even those ones are getting a good amount off their 52-week highs as well, but it's not nearly as much as many of these stocks, right? And so, I've been talking about this for a while. Like most of the stocks in the stock market have been cut in half or more than cut in half. It's just when the big guys are holding up decent, not a lot of people pay attention to it unless you're really, really into this stuff, right? Now, for Tesla, big money controls Tesla nowadays. It is such a big market cap. Big money controls that baby. So if big money controls that baby, right? And big money wants no part of anything growth related, how do you get this stock to go up in this scenario, right? I think this is, think about this for a moment, right? And I understand people want to say, okay, you got the Shanghai Gigafactory producing units crazy. They're even doing more expansion there. You got Austin Gigafactory coming here very soon. Fremont's pumping out cars left and right. And it's a lot of excitement. And you got the robo-taxi network right around the corner. Tesla's working on actual literal robots. You got all this stuff going on, right? Does it all matter in this sort of market? No, they don't care about that. They don't care about what Tesla's long-term opportunity is. They don't care about what Tesla's revenue numbers are for this upcoming year and the year after. They don't care about Tesla's EPS expansion. None of that matters in this sort of market. And so how do you get Tesla stock to go up if big money doesn't want to buy and they don't care about any of this right now? That's the tough part for Tesla. Like literally, how do you do it? You can't. It doesn't matter what Elon says. It doesn't matter what Tesla comes out with here in the short term. It's just until big money wants to start buying stocks again, something like Tesla has nowhere to go essentially, right? Now, keep in mind, this stock was $500 range just back in May of 2021. So even at 772 today, it's still up quite significantly since May of 2021. Meanwhile, a lot of stocks have gotten absolutely devastated during that time period, right? And so I think that's some kind of food for thought there that, it's not like we are not up significantly over basically where the stock was a year ago. A year ago, the stock was, still under $700 a share. And, so still this is a stock that is, believe it or not, even after this dramatic fall, is still up versus where it was a year ago and where it was 9 months ago. Now, if we look at this, right, EPS, this past year, 678, supposed to do 1048 this year. That's average analyst estimate. And keep in mind, Tesla does beat many, many times, so maybe it's even better than that. But 1048 is average, and that's 32 analysts cover the stock, okay? 32. 26 analysts have done their numbers for 23 so far, and the average estimate for next year for 23 is 1273. That's tremendous. Revenue growth, 53% expected in 2022. Only 25% expected in 2023. We'll see what happens with that, okay? That's kind of funny. But once again, to go back to this point, the funds right now, the hedge funds, institutions, big money, they don't care about any of this. They just don't. It doesn't mean a dang thing to them in this sort of market. All they know right now is sell or not buy, okay? And until that switches, Tesla stock is just in a tough position. And keep in mind, it's not just Tesla. All the EV players are getting hammered. Every single one of them out there. And so if Tesla's getting hammered, believe me, the rest of them are going to get hammered, likely even worse in that scenario, right? Now, something has been interesting recently, right? I own some very specific small cap stocks that I know a lot of people know, such as Tattooed Chef, such as Corsair Gaming. And what I've seen with those stocks, right, is they've actually been holding up pretty darn well the past month, basically since they hit their bottoms right around a month ago, almost exactly a month ago, technically about 28 days ago or so. Corsair was in the 17s at the bottom. Tattoo Chef reached, I don't think it was 10, but it was surely $11 a share. And, these stocks bottomed out. And actually, as all these other stocks have been devastated, a lot of these stocks have been holding up really good. And some of them are not only not going down, but they actually have gone up since where they were basically January 23rd, 24th, when the a lot of these stocks were getting absolutely devastated. So I just think it's interesting, and that might be a little, if you want a little small glimpse of hope in this market, which I know there's almost no hope in this market right now when you just see everything just get devastated. If you want a little bit of hope, look to the small caps and look for the fact that many of these small cap stocks are holding in there pretty decent and have actually uptrended since they hit their bottoms. Meanwhile, everything else has been devastated. And remember, these were the type of stocks that got hit first. They got hit first, right? They got absolutely devastated first. But at the end of the day, those ones lead you down and those ones end up leading you up. The smaller cap stocks, Tattoo Chef's $1 billion market cap, Corsair Games like a $2 billion market cap. And so that's just something to kind of keep an eye on. And regardless if you want to own Tattoo Chef or Corsair or any of those stocks, I think they're important to just keep on your watch list and see what happens with pricing activity with those stocks. I think it's actually really, really important, okay? Now, I did a video last night on Cathie Wood just sold out of one of her positions, right? And what would be considered as a long-term core position. And, I think a lot of folks see that, and ARK is known for Tesla stock, right? And I think it makes some people fearful, like, could Cathie Wood sell a bunch of Tesla shares, essentially, right? And when you see what has happened to ARK, which has been absolutely devastating, a lot of people start to think about, this ARK blow-up situation, could it get a lot worse from here even, right? And I know that's hard to even fathom it getting even worse, right? But a lot of people say, okay, if Tesla keeps falling, look at Teladoc, look at Roku, look at Zoom. If these stocks keep falling, there could be even more outflows of money out of Cathie Wood stocks. And so you get into this kind of like vicious cycle, and it's like, where does it end? Where if there's outflows of money, maybe she has to continue to sell stocks. And if they have to continue to sell stocks, that makes the stocks go down more. And it's like, when do you finally end that cycle? Now, in the up cycle, it's great because you keep piling more and more money, you keep buying more and more stocks, it keeps the price going up. But on the downside, especially if you get in a situation where you're getting outflows, man, that is tough. And when does ARK get real significant inflows again? I think that's going to be that's a tough question for me to even make an estimated guess on, because even when the market does start to come back, I think there's going to be a lot of investors very, very shy of buying back into ARK because of how bad things have got devastated. They're kind of going to be a little wary for maybe 3, 6, 9, 12 months until it's like it continues to go up and continues to go up. And I think that's when people will finally start saying, okay, maybe I'll give ARK a chance. Maybe I'll get back in. So that makes ARK into this situation where ultimately it's really, really tough. And that sell, that was a tough sell. I'll tell you that. That was a very important stock she sold there. No, I watched this video from 3 days ago, Jeremy Grantham, who's been calling, super bubble and those sorts of things. I watched this video, and basically what he said buy value stocks and buy non-US stocks, okay? And that should be kind of expected from Jeremy Grantham. So, but at the end of the day, when people listen to that, well, shoot, what do they think? Well, Tesla's not a value stock, and Tesla's a US stock, so I guess don't buy Tesla, right? And so when you hear things like that, right? When you hear folks like Jeremy Grantham talk the way they do, in a downtrending market, it's extra, extra powerful. When you can have that negativity with a downtrending market, it's extra powerful. If the market's going up and you're talking negative, no one listens to you, no one gives you the time of day, right? But if you're talking negative during a downtrending market, people are like, ears up. What's going on here, okay? And so that's something going on. But the big question is, would Jeremy Grantham, would he have ever bought Tesla stock? Let's be honest. Or did he ever buy? No, of course not. Tesla stock, this was as of 2020. Tesla stock was up over 4,000%. It's up a whole lot more than that now, right? And so nowhere along here was Jeremy Grantham like, I got to get into Tesla stock, right? That's not his cup of tea. Nor is Netflix, nor is Amazon, nor is any of those major growth stocks. And so I think that's just something to kind of keep in mind in this sort of market, is people like him, they never would have bought these stocks in the first place. And it doesn't matter if Tesla goes down to a 40 forward P, which would be just stupid, okay? But if it did, he's not buying, because he's still going to say, well, you should be trading at a 10 or 12 or 15. And so that's the thing with folks like that. It doesn't matter really the valuation. A lot of them just won't buy, right? Even something like Meta trading at a 14, a lot of folks just aren't stepping up to buy that. And when I say folks, I'm talking about big fund managers. They're just out, okay? So when it comes to Tesla, and thinking about the stock and when does it stop crashing and what price should you expect and things like that, I think everybody should be mentally prepared that's a Tesla shareholder for the stock to go to the $400 to $500 range. Doesn't mean it's going to happen, okay? But I think everybody should be mentally prepped for that type of situation to happen, because I think it's very important to remember that this stock was at $577 back in May. Now ask yourself for a moment, are we in a much more confident market or a much more unconfident market today than we were in May 17th of 2021? Well, we're in a way more bearish market now than back then. And so to imagine the stock goes back to the $400 to $500 range is not like the craziest thing in the world, right? When you just take into account, it doesn't mean it will happen. If all of a sudden this Russia situation gets a lot better and, inflation data over the next couple months isn't going up as fast and the Fed doesn't do anything crazy, right? It's very possible that Tesla bottoms before then. But don't be surprised if it goes back to the $400 to $500 range, because the market is significantly more bearish now. At this time, actually, I felt like the market was pretty darn bullish and maybe too bullish. Now, the market is so bearish, it's not even funny. So if the big fund managers want to sell this off to $400 to $500, that would not be crazy at all in this sort of market. When you're seeing Meta today hit $100-something a share, when you're seeing PayPal at $100 a share, when you're seeing a lot of these stocks down 50, 60, 70, 80, 90%, for Tesla to go down in the $400 to $500 range is not crazy at all. That's definitely doable. That was probably a great long-term buying opportunity for a lot of investors out there, right? But, to think it can't go down those ranges, you got to be crazy. If you can't think it can go down those ranges, it just was down there not that dang long ago, okay? So that's some food for thought there, guys. So anyways, hope you enjoyed this. As always, at the end of the day, when it comes to great companies, if you get significant dips, it always makes sense to buy. And, that goes down more, you get more buying opportunities. And with a stock like Tesla, you can only buy this type of stock if you fully believe in it. If you don't, it's not one, as an investor, you can really own. It's just not. It's too, too volatile, too many moving parts, too much drama. This is one of those that you really got to understand it all the way through. You got to understand and have estimations on how many cars you think they're going to sell in the future, what you think the robo-taxi network can do, and many other various things, such as like how much revenue they can get from subscriptions of their business model and things like that. I think if you can't put numbers like that together, I think Tesla's a tough one to hold, especially in this sort of market, okay? Hope you guys enjoyed this. As always, make sure to subscribe to the channel if you're not already subscribed. Also, Moomoo right now gives you a welcome bonus of 5 free stocks, up to 5 free stocks, and with a $100 deposit, you get a free TTCF share, which is pretty darn awesome from Moomoo there. Check out the pinned comment down there if you want to take advantage of that before they end that deal. Much love as always, and have a great day.